Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar. And we have trades lined up for 12/18/07. It's Tuesday. Look, we are getting into late December. As a rule, I really curb my trading in the middle, from the middle of this month all the way out through January. I guess we'll have another couple of trades here or there, and then the rest of the time I'm going to monitor the markets and be in my trading rooms, but probably not do so much trading. Maybe we'll pop out some day trades here and there, but I don't know if I'll be issuing Rex on the board, only if something really good turns up. During the month of December, it can get really, really choppy with big moves, highly volatile moves with very small volume, because many of the funds that trade our commodity markets have closed down for the year. Their books are closed and they're done. And a lot of their traders are on vacation with the kids and getting ready for Christmas and doing their holiday spirit thing. And they're not going to be doing a lot of this. So I think that we'll do what we normally do every year and just sort of back off. But for tomorrow, looks to me like the S&P has a rally in it first, and then it'll get tired and back down we should go. I would think by the end of the week we'll be down no matter what this week holds in store for the next couple of days. So we're going to look to sell a major rally here in the S&P. Not a major rally, but some sort of a knee-jerk reaction up. Gets high enough, we're going to go short in the S&P. We like the opposite in wheat. Wheat has a tendency of having a 2-day down jerk and then a reaction back up. Wheat put in contract highs on Monday and then settled at the lows. That tells me the likelihood is that the wheat could drop down tomorrow. That would be considered day 2, because here's day 1. This would be day 2 in a bullish market that we've dropped, and we like to buy day 2s for the hook back up. Now, a lot of times what you'll find is if you have a market that is bullish, you get down day 1, down day 2, and then the hook back up. But in a market as bullish as wheat, with the solid fundamental to make it go higher as wheat has behind it, I would expect that likely is what we're looking at here, because it settled lower, is already down day 1, as I just mentioned. So we'll get one more down day. You'll buy it here and look for the turnaround. That's our plan in wheat. Come down to our site if you'd like the exact wheat recommendations for tomorrow. You can come down to www.livewithoscar.com. Come into our chat rooms and ask me about the wheat trade. I'll be more than happy to point it out to you. We're also looking at the NASDAQ in the same light as the S&P. First, a rally gets a little euphoric up there, and then the sellers come back in after making sense out of what's going on. I don't think it's ready to rally yet. Traders, in the last video, the weekend webinar, I showed you some charts. I'd like to revisit a couple of those charts now. We'll take a look and see where we were on Friday into Saturday for the webinar, and where we are today, Monday night going into Tuesday. Let's go take a look at the charts, and then I'll come back to you. Okay, traders, we are looking at the wheat, the ZWH8, the March daily wheat bar chart. As I had mentioned, we put in contract highs, settled at the low of the day. I think we have already down day 1 in place. I expect down day 2, get down into the 940-something area. Again, come to my site. I'll give you an exact on that. And then the hook back up. That's what we're looking for in wheat. It would be our rule of buying 2 days down in a bullish market. Buying 2 days down in a bullish market, that's what we like to do. That's what we normally would do on a chart like this. But again, I'll illustrate, we would expect after the highs to come in to have 2 big down days. But because wheat's so bullish, I think that this down day already yesterday is down day 1. Let's look for the hook in the middle of the day tomorrow. That's the wheat chart, traders. Let's look forward. Okay, I mentioned this chart to you in the webinar. It was the Dow Jones Transportation Average, the cash average. I said that we had a mirror image here, and if we came in on day 3 and it looked like this, today will give us our signal. I think that the mirror image is complete and it put in a bearish signal. If we cannot get above today's range or above today's high, above Monday's high and the Dow Jones Transit, you will get a break based on the mirror image pattern. Keep your eyes open for that, traders. Okay, traders, we are looking at the Emini Russell or the ER2H8 as we have on our trading platform for a symbol. I mentioned that the head and shoulders, you've seen this in the weekend webinar, there was a head and shoulders and that we should break down. Well, here was the break today, and likelihood is more of it coming before the week is over. Remember, the head and shoulders upright is bearish, right? I did an entire video about this, and possibly a few more before that, because this is what's going on at this moment in time. And as traders, that's what we look to do, is figure out what's going on right now and take advantage of it. So this is where we stand now, and this is what's happened today, and this is what we think will happen before the week is out. Let's look at another chart from the webinar. Okay, traders, we are looking at the dollar index, the March 08 contract. Again, the head and shoulders formation. We talked about that should spike us higher because it's inverted. It's more like this shape, shoulder, shoulder, head. Well, that is bullish. This was bullish. We had a nice run on dollar index. Again, if you want to compare this chart here to the chart I displayed in the weekend webinar on Saturday, please go back and look at the video right before this one, and you will see that this is exactly what is expected to happen when you have an inverted head and shoulders. The dollar index made a move, a nice strong one. Reinforcing that point about these head and shoulders and how important they are, we're looking at the March S&P, the SPH8 or the ESH8 contract. We pointed out this head and shoulders in the weekend webinar, and that we should break, and look at the move that we got today. A nice strong break. The market was down a lot today. Again, like the Dow Jones and the ER2, we'd expect more of the same before the week is out. So keep an eye on this S&P chart. Okay, traders, so you've seen the charts. You see what we have out there. Remember that little illustration in the wheat chart? It's likely what we're going to get. At worst, we will get 2 full days down and then the swing right back up. Very bullish there. Come on down to my site. We'll talk about that tomorrow. Okay, for the S&P, the SP, the ESH8 is the mini. The SPH8 is the symbol for the large. Omni says to sell it in the low to mid 1470s. Trading right now around 1464. If it pops into the low to mid 1470s, we would look to kick some out up there, expecting maybe a little more and then back down. Omni's profit objective on this trade is the mid to low 1440s. That may take a day or two. We'll keep you informed as the week progresses. But for now, be out by the close unless otherwise instructed. Again, selling it up in the 70s, hoping for the 40s within a day or so if it doesn't come tomorrow. That's the S&P. NASDAQ is similar. Give me a call if you'd like. 702-629-4755. And we can discuss the NASDAQ trade as well. If you're doing your homework out there, traders, and you have a chart you'd like to point out to me, keep on sending the charts. I love getting the emails. I love grabbing the homework from you guys, doing the analysis and getting to see what it is that you know and what we can share together to help enhance your learning experience here. Shoot me out those emails with the charts attached at oscar@futuresanalysts.com. All right, traders, I want to get back in there and look at these markets. There's only a few more days I'm trading this month, so I want to get as much trading time as I can. So I'm going to jump out of this video. Don't forget to do your own homework. Don't take my ideas without doing your homework first. And always place your stops and place them first. All right, traders, don't forget, say this to yourselves every day. every morning, every evening, especially when you're placing trades and especially when you place your stops. This will help you to keep your emotions in check. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.